Hello traders and welcome to the next week's preview. This is Steve Voulgaridis. I will be filling in for Blake Morrow this week. And as we usually do, we're going to go over a few events that took place during the week that just ended. Have a fast preview of what to expect for the week ahead. And most importantly, go over a few interesting charts. So let's begin. I want to take you first over the DXY index, the dollar index. Obviously, this is one of the most important charts for any FX trader. And let's begin by having a look at the 4-hour time frame. As we see here, we had the wedge. This is the ascending support trend line. We broke below it intraday on Friday. We closed below it. We had a rebound at the end of the day, but we still closed below it, and we actually registered a lower low. This is the first time we did that since the first days of February, around here. And this is an important development, obviously a bearish development. If you have a look at the daily chart, you'll see here as well that we had a move lower, then a recovery, part of this move, and if we're breaking lower again, obviously this is the beginning of a second leg lower, because don't forget, such a huge uptrend usually takes more than a few days or a couple of months of a correction before it can reestablish itself. I want to add here that, in case some people don't know it, that since the creation of the Eurozone and the creation of the common currency, the euro became by far the biggest component of the DXY. What does that mean? That means that the movements you'll see in Euro USD, in a big extent, are going to be mirrored by the DXY index. So somebody cannot analyze one without having a look at the other. So we got an initial move higher on Thursday. That was due mostly to Draghi. Draghi tried to be dovish, and he actually said all the right words to show that the ECB will remain accommodative for as long as necessary. But the ECB did upgrade the growth and inflation forecasts for the next few years. And then on Friday, we got a rumor that there was a discussion among some members about the possibility of hiking rates before the end of the QE program. As you understand, even by having a discussion like that, shows that the next move is probably not going to be an easing move, but it's going to be a tightening move of some kind. So the market had already discounted a lot of negativity about the political developments, and it still does. We don't believe that we're going to have any real surprises in France. We don't believe that Le Pen is going to be elected. We also believe that we're not going to have any serious developments in other countries of the Eurozone, at least not imminently. And we do think that it's quite likely that the ECB will sooner or later follow the US in a tightening cycle. We all know Germany's objections to easing anyhow, and as we know, Germany is the biggest country and the steam engine of the European Union and the Eurozone. Given all that, we understand this move higher, and we actually believe that being short the euro at the moment might not be the best bet out there. So, besides having a look at the Euro USD, we wanted us to have a look at other euro pairs. Let's say, for example, let's begin by the Euro Yen. The Euro Yen topped out in 2014, 2 years and a few months ago, near Christmas actually. We then had almost 2 years of a downtrend in a well-defined channel, and after consolidating in a triangle, an explosive move higher that brought us out of this descending channel. What followed? A period of a slow correction lower, and it was actually shallow. 38.2% is the fib that we tagged before reversing, and we've seen a quite impressive rally during the past couple of weeks, and we're currently testing, we temporarily broke above it on Friday, the corrective channel. The next move might easily be higher, but it's not only the Euro Yen that we're looking at. It's the Euro Aussie, kind of a similar situation, a well-defined downtrend, this time in a wedge. We broke below it, we tested a level that has acted multiple times, an area actually that has acted multiple times as a support and resistance, and then an impressive rebound out of it. We're currently testing, actually we've broken above another area which is around 141, and it seems quite likely that we're at least going to take the next area of support resistance, which is 144.50 roughly. Of course, nothing will move and nothing ever moves in a straight line, almost nothing. So, any pullback is probably an opportunity to join the trend. Euro Kiwi, I don't need to say much about that. The break higher was simply to say impressive. We've rallied like 10 out of the past 11 days. It's obviously in need of a pullback, but any pullback to 152, 152.50 will get people interested to join the trend, people that were not in it initially. EuroCAD did not present as strong of a downtrend like the Euro Aussie, the Euro Kiwi, and the Euro Yen did, but still we see that after breaking below a triangle, we got stuck in a range for about 4 months, a 500 pip range, and we're currently breaking above it, and above the 200 DMA actually. If this does not prove to be a false break, we're looking at an upside that's at least another 500 pips. A last thing we could have a look at before briefly talking about what's upcoming in the next week is oil. What happened with oil briefly is a story of an inverted head and shoulders formation that everybody was looking at. You can see it here clearly on the weekly. That got people holding record long positions, as CFTC has shown. And once the break above the $52 neckline happened, but the acceleration higher failed to materialize, we actually, if you see here, we got a wedge, and the $54, $55 area of resistance rejected price multiple times, started getting people worried. We also got some very high inventory reading, and that was probably the trigger that was missing for people to start unwinding those positions. And usually when that happens, what you get is what we saw, which is a 4-day move that brought crude more than 10% lower. We're expecting to see what's going to happen now. We might get some kind of a rebound, but obviously a retest of 50, 51, 52, I doubt we're going to go to all the way up to 52, will obviously get a lot of selling interest. We have an ascending trend line here depicted in blue that passes currently around 46.5. That might provide some kind of a support, but in general the outlook for oil does not look good for the bulls at the moment. A final word before we close this video of what we expect in the upcoming week. We have 5 major central banks having their rate decisions. It's the Norges Bank, it's the BOJ, it's the SNB, it's the BOE, and finally, as everybody knows, it's the Fed. We're not expecting anything different than the market is already pricing in. It's more than obvious that the Fed is going to hike. I mean, with the market already discounting it as a given, not doing it is going to hurt their credibility. What is going to influence the dollar, though, is not if they hike or not, as I said, but it is the rhetoric that's going to follow the decision, which is going to prepare the market for what's coming for the rest of the year. Are we getting another hike? Are we getting 2 more hikes? The market is currently pricing 3 hikes for 2017. So anything that will change this is obviously going to move the dollar. Now, having to do with the rest of the central banks, the BOJ, the SNB, the Norges Bank, and the BOE, we just briefly want to say that the Norges Bank has been facing higher inflation lately, and they still maintain a dovish bias. We don't know for how long. The BOE, more or less an equivalent situation, and the rest of the economic data have not been disappointing at all. So for those two, we would say that the risks are tilted to the upside for those two currencies. I mean, if we get any kind of a surprise, it should be probably higher. That's it. I think we've covered the most interesting charts we wanted to go through. Obviously, we can go through everything, but if you want to have access to our analysis, and if you want to try out the ForexAnalytix platform, which I strongly suggest, you can do that by visiting our homepage and start your trial. It's only $1 that gives you full access to all the various types of analysis we cover: Elliott wave, harmonics, basic technical analysis, candlestick, macroeconomic analysis, and last but not least, to our patterns in play. Until next week, trade safe, trade carefully, be nimble. We might get some volatility. Take care.